Hello, friends. James Stevenson back with the final episode in my forecast review series. It is the earnings preview episode, getting you hyped up for Tesla earnings Wednesday after the bell, along with my co host Loki, who is curled up in bed, but still wide awake. You can see those eyes moving around. You can keep an eye on Loki in the Loki Cam as I review what to expect when Tesla releases their investor letter. So that's how Tesla releases earnings. They put out a deck of slides, and I have taken the liberty of preparing what I expect to see on two of those slides from that deck. One of them, like the pages move around some, one of them is typically page 3 or 4. The other one moves around depending on how many photos there are in the middle of the deck and charts and stuff for you to look at. You typically get a few more pages in the Q4 earnings letter than you get in the other quarters because some of the slides will be full year comparisons instead of quarterly comparisons. But I'm going to show you my quarterly expectations for Tesla here. These are actuals, you see, in columns. In the columns for all the previous quarters. Q4 of 2022, that's the prior year, same quarter comparison. Then you got Q1, Q2, Q3 actuals, and my forecast from December 31st, 2023 for what I thought Q4 2023 would be. So let's run down the list, Rob Mauer style. Pour one out for Rob Mauer, no longer making videos for Tesla Daily, but he is on to the next adventure in his life. Good on you, Rob Mauer. Do what makes you happy. I am sad to no longer have Tesla Daily videos to watch, but I'll run you down the list the same way Rob used to do. For automotive revenue, I've got an expectation in my forecast, $22.4 billion almost. Which would be a new record for revenue. I'm expecting record revenues. That's up 5% year over year in my forecast. Even though the regulatory credits are not a record, I'm forecasting a hair under 400 million. So less than we've seen in most of the trailing 4 quarters. Then, so that's a number Tesla could beat. Here's one for automotive gross profit. I'm expecting $4.2 billion. So about what we saw in Q1, I guess. But at a worse automotive gross margin percentage, this is because Tesla has continued cutting prices and making vehicles more affordable. The revenue keeps going up because the number of vehicles sold is increasing by more than the price cuts are decreasing the revenue by, but the margins are getting worse at the lower prices. You've just got less revenue to divide into, so your denominator is getting smaller. Yeah, and that's what's doing it. It's making the cost of sales larger and the remaining gross margin worse. So total revenue up 9%. It's even better than the automotive revenue because the Tesla Energy division has been growing so much lately. That's another area where we could see Tesla beat what's in my forecast is profitability for the energy division. Total gross profit, I've got $4.7 billion here. That would be the best gross profit number we've seen this year, though it would be a decline year over year from Q4 of 2022 when prices were higher. Then total GAAP gross margin percentage I have at 17.8%. Operating expenses, these just continue to rise over time. Typically, I've got about $2.4 billion in as my expectation there, with income from operations around $2.3 billion, similar to what we saw in Q2, I guess. With operating margins coming in at 8.6%, halfway between what we saw Tesla report in Q2 and in Q3. I hope we don't see this number decline a lot from where it was in Q3. Then adjusted EBITDA, got that at $4.3 billion. Again, real similar to what we saw way back in Q1, but at a lower adjusted EBITDA margin percentage. All these profit margin metrics get worse at lower prices. Net income attributable to common stockholders, the GAAP net income, I've got right at $3 billion, which would be the best for this year. But we could see this number come in at like $2.3 billion if Tesla doesn't declare any of the tax favorability they have coming to them from prior years' net operating losses. So Tesla's been stashing that on the balance sheet and offsetting it with a deferred tax liability. But they could reduce that liability, reduce those assets, and flow them through the income statement, which would materialize as a reduction to income tax expense, even if that number flips to be a positive number, a benefit to Tesla, because they have more benefit against their 2023 federal income taxes or international income taxes than what they would have paid. So the sign on that could flip, which is what's in my forecast. But if that doesn't happen, if that unusual activity doesn't happen, then we won't see numbers this good. For GAAP or for non-GAAP, this 3.5 could be more like 2.8 or something. If we don't see Tesla take any of their deferred tax favorability this quarter, I expect we will see them take that favorability, because if not, when? Come on. But I've been saying that for a long time, and Tesla hasn't been taking it. So what would that give us? GAAP EPS, 85 cents. Non-GAAP EPS, 99 cents. But that could be more like 80 cents-ish. If we don't see Tesla take any of that tax favorability. So if their tax number looks very normal or very similar to what we saw in the previous 3 quarters, then expect these EPS numbers to be, 20 cents lower than what you see here on account of that missing favorability that was in my forecast. Then Tesla does report these numbers. I don't even bother jotting down what they are because I don't forecast cash flows. Capital spending, net cash from operating activities, etc. That's not in my forecast, so I just put some placeholders in here. But there, before we leave this page, let's look at the gross margin for automotive. 18.7%, identical to what we saw in Q3. Automotive excluding regulatory credits, better is what I'm forecasting, because last quarter in Q3, Tesla had so much regulatory credits revenue that was helping to boost the margin. So without that, it was worse. It was 16% excluding regulatory credits last quarter. I think it'll be a little better than that. We'll see what we get when Tesla reports earnings. How about the energy generation and storage business? That was at 24.4% gross margin last quarter. I'm not forecasting to improve on that. I've got it down to 20.1. It does get a little colder in Q4. Maybe there's a little less going on in the way of installations in Q4 with seasonality. I don't know. We'll see what we get. Could be around 20%. That's what's in my forecast. Services and other, I have right around 8%. 8% is what we saw in Q1 and Q2. It got a little worse in Q3. I'm expecting that to bounce right back. Let's go to the next page. We get a little more detail further in the deck on the income statement. So I'll just walk you down this page. These numbers we've seen already, regulatory credits, and then the total automotive. Here you can see the breakdown between automotive sales and automotive leasing. There shouldn't be as much leasing as there was in Q1 and Q2, or at least there weren't as many new leases begun. A lot of that lease revenue is from prior obligations, people who leased in previous quarters. So you see a pretty stable leasing revenue line. Then for energy generation and storage, I've got that up to almost $1.9 billion, which would be a record all time. It's been 1.5 to 1.6 every quarter this year, could be higher. Then services and other, $2.4 billion. So that number rises as the fleet grows of Tesla vehicles. making total revenue of $26.6 billion. That would be an all-time record high. Any number beating the Q2 number would be an all-time record high. So 25 billion or better is going to be a revenue record for Tesla, which they are used to breaking their all-time quarterly revenue records all the time. Most of the time, Tesla reports an all-time record for revenue for any quarter. If you look back over the past 10 years, that's usually what happens. Then costs of revenues are here. Total cost of revenue, $21.9 billion here. I've got the energy costs rising by about as much as I've got the energy revenues rising by, which is why the margin isn't getting any better. Research and development, about 1.1 billion. That's a little less than we saw in Q3. SG&A, 1.3 billion. That's a little higher than what we saw in Q3. So overall, we got a very similar number in my forecast to what we saw. No expectation that there would be any restructuring and other, but it's a wild card. You can never be very confident that you know what's going to happen with the restructuring and other line. Okay, so that makes income from operations at 2.3 billion, similar to what we saw 2 quarters ago. Interest income has been rising. It's about 250 million per quarter, so that's what I've got in the forecast. Interest expense down to about 30 million per quarter, so that's what I'm forecasting. Then we've got other expense income net. This one's always a crapshoot. You don't know what number you're going to see. Tesla report here. Could be positive, could be negative, could be big, could be small. That's one of those things that makes it a lot of fun to forecast earnings. Those wild cards. And here's the big bogey in my forecast. I'm forecasting a credit on this line for provision for income taxes, as Tesla recognizes a big chunk of their deferred tax asset. So, you know, about 0.7 billion worth of it is what I've got in my forecast. But if we see Tesla report a similar number to what we saw them report on average over the previous 4 quarters, then the earnings number will miss what I'm forecasting by $700 or $800 million, something like that. I've probably stressed that point enough. Net income attributable to non-controlling interests, usually a small number here. Again, you don't know in advance if it's going to be positive or negative, leading you to net income. And these per share numbers down here, 85 cents gap. We saw on the previous page, and this is my expectation for the basic and diluted share counts. 3.18 billion basic shares outstanding, with almost 3.5 billion diluted. If you include all those stock options Elon has vested, the board has approved for him to be able to buy, but he has not bought yet at a discount. And stock-based compensation here, forecasting right at $500 million, similar to what we've seen over the past 4 quarters. All right, and then I'll show you one more thing, which is just the waterfall chart that I will be updating when the earnings release comes out. I'll be punching in all the numbers that are shown in Tesla's slide deck, and then I will tweet out an updated version of this waterfall chart that shows all the ways that I missed. So you may see a giant one here that's unfavorable, provision for income taxes, falling to, you know, a 2.8 billion number or something over here, right? With a bunch of offsetting errors over here. And that is my earnings preview episode. Hopefully I have gotten you hyped for Tesla earnings. The afternoon of Wednesday, January 24th, I know Loki is hyped to see that earnings release. And with that, I will outro by saying, if you enjoyed watching this video, don't forget to click the like button. The like button is how the algorithm knows whether to recommend this video to other people or not. The more people who click like, the more people will see the video. So thank you for doing that. And thank you to everyone who subscribes to me. You can do that for free on YouTube. If you're watching me on YouTube, I'll leave you a link over here you can click. But a bunch of other kind people support me on Patreon or on X, or by joining my YouTube channel as my executive producers, Kathy Kitchler and Rebellionaire.com did. And I'll see you in the next one.